Hey, it's David with Solar Edge Pros, Texas' best solar installer. And today we're going to be talking to you about solar tax related questions that may be a little bit more technical than our previous videos. If this is the first time you're watching this video, please go ahead and like it and subscribe to our channel to get more information on solar panels, solar technology, or just solar in the Texas area in general. Thanks. Does the solar tax credit apply to you? Anyone looking into going solar has likely factored in the benefits of a 30% tax credit. That's a large amount taken off the costs. But how do you know if it applies to you? Or even more importantly, will you ever get to take advantage of the credits? Fortunately, we may have some info that will help you, a savvy homeowner, discern how much you'll be able to save with solar panels. This information comes from Edward Robles, an enrolled agent certified by the IRS, to discuss what homeowners should know about the investment tax credit, FITC, before going solar. Mr. Robles has been helping people claim their solar tax credit since 2011 and has solar panels on his roof. See his contact information below if you have any additional questions about the tax forms and going solar. If a homeowner is taking money out of his pension and pays taxes on that money, will that qualify him for the federal income tax credit? Yes. When you pay taxes on your pension, regular distribution or a lump sum distribution, the income taxes qualify to be offset. Now, if someone is getting early distribution and having to pay a penalty on that distribution, that penalty, although technically taxed, comes after the tax credit. So if they purchase a $30,000 solar panel system, they will pay whatever their income tax bracket is on that system and then pay an additional $3,000. So they would get $9,000 in tax credit, then have to pay that $3,000 penalty. Can you confirm that the tax credit rolls over every year until used entirely? The IRS continues to not provide clear guidance on this matter, but what I can tell you is we've all assumed so long as there is a Form 5695 to be filed, there will be a line to carry forward. So it's safe to assume that the rollover will continue at least until 2034, when the tax credit is set to expire. What is the ideal tax bracket for someone to get all of the 30% tax credit in 1 year? A married couple without kids that are W-2 wage earners making jointly $100,000 a year or more will likely get the full amount back the first year. People that make less or are self-employed, even if they make $100,000 or more, may have trouble getting the entire tax credit back in 1 year. Can you sell all or parts of your FITC to an eligible third party if you are a homeowner? Unfortunately, no. However, businesses that own residential properties and commercial properties can do so. Basically, if you are a landlord, have an LLC, or rent out your property, whether it's Airbnb or long-term, you can qualify to sell all or part of it. However, it's worth mentioning the people selling them have no idea how to claim the income, and the people buying them have no idea how to claim the credit. As of yet, not until they file taxes for 2023 will this have been attempted for the first time. What are the differences between a refundable credit and a non-refundable credit as it relates to the solar tax credit? The most important thing to consider is the order in which credits apply to taxes owed each year. Non-refundable always hits your tax liability first, then refundable credits. The FITC, a non-refundable tax credit, only hits your tax liability after a few other credits get deducted. For example, foreign tax credit, dependent care expenses, education credits, the non-refundable ones, retirement savings credits, energy efficient doors, windows, and insulation, electric vehicle credit, child tax credit, at least most child tax credits, adoption credit, those all take an effect before the FITC. So additional taxes that are levied, such as self-employment taxes, minimal tax, penalties on early distribution, etc., well, those come into effect after the solar tax credit is applied. So someone who's self-employed making $100,000 each year will still have the $15,000 in self-employment taxes to pay even if they go solar. There are other tax credits that hit first before the solar tax credit. And if they wipe out the liability before the tax credit can be applied, then you may not see any difference in your taxes owed despite having gone solar. Basically, you may never get to use your tax credit until, let's say, a child turns 18. It just depends on how large of a tax liability you have. If the homeowner doesn't pay an income tax, can they pass the solar tax credit down to a child? No. If the homeowner is, for example, a pensioner, they will never receive the credit. Their children will not be able to inherit the tax credit if they were to die. There are, however, a few ways around it. The child could qualify for the solar tax credit if they live in your home and, of course, had an income tax to pay and met the basic qualifications for the tax credit, and the parent gifted the solar panel system to them. For more information on gifting, be sure to meet with Edward Robles or your other tax expert. What if you own the solar panel system, but not the house? Could you still qualify for the tax credit? Technically, no. Okay, so quick edit. Thanks to Sir Montego 2, technically yes, but you, the taxpayer, will need to provide proof of residency to claim the tax credit. Can you add an entire roof cost in with solar or just part of it to claim the 30% tax credit? No, unless the work done on the roof is directly related to the system, i.e. having to move an air vent to make room for the solar panel system, could the tax credit be applied to that specific cost. What about a pergola? If the cost of the structure, whether it be a carport, pergola, etc., is significantly higher than the solar panel system itself, it would likely not qualify for the solar tax credit. However, if the structure cost is less than the solar panel system, then it would qualify. Pause. Another edit thanks to Sir Montego 2. Any solar structure qualifies for the tax credit, assuming the structure was built for the panels. There's no test or check to see if the structure's cost greatly outweighs the cost of the solar panels. Can the solar tax credit be applied to panels added to the system? Yes, whether the panels get added to an existing system or the same property owner gets panels installed on a different location, the tax credit can be applied. Woohoo! If I sell my home, would the solar tax credit transfer to the new homeowner? No. The original owner would have the tax credit even if they no longer live in the home. Furthermore, the original owner may not get to use the tax credit until long after they sold the house, depending on any additional tax credits they may have. How do I get in contact with Edward Robles? You can reach Edward at 210-248-2006 or Edward at abovethecurvetax.com, or visit his website, abovethecurvetax.com, to ask a specific question. Thanks for watching. I'm David, and if you're already interested in going solar and you want to get a free quote, go ahead and reach out to us at 210-401-9030 or visit us online at solaredgepros.com. Thanks again for watching.